நீராறும் கடலுடுத்த நிலமடந்தை கெழிலொழுகும் சீராறும் மதனமென திகழ்வரத கண்டமிதில் எக்கணமும் அதில் சிறந்த திராவிடனல் திருநாடும் தக்க சிறு பிறை முதலும் தரித்தனரும் திலகமுமே அத்திலக வாசனை போல் அனைத்துலகும் இன்பமுற எத்திசையும் புகழ் மணக்க இருந்த பெரும் தமிழனங்கே தமிழனங்கே உன் சீரிழமை திறம்பியந்து செயல் மறந்து வாழ்த்துதுமே வாழ்த்துதுமே வாழ்த்துதுமே.
असतो मा सद्गमय तमसो मा ज्योतिर्गमय मृत्योर्मामृतं गमय.
मा सद्गमय तमसो मा ज्योतिर्गमय मृत्योर्मामृतं गमय.
असतो मा सद्गमय तमसो मा ज्योतिर्गमय मृत्योर्मामृतं गमय. ॐ शान्ति शान्ति शान्ति.
Welcome to the Day 3 session on Digital Initiatives in Indirect Taxation. Digital initiatives in indirect taxation refers to the integration of technology and digital platforms to streamline and enhance the administration, compliance, and collection of indirect taxes. These initiatives aims to modernize traditional tax systems, reduce manual intervention, improve efficiency, and promote transparency in tax processes. Now, I request Ms. R. Sweta, Assistant Professor, PG Department of Commerce General, for the welcome address.
Respected dignitaries, esteemed guests, and cherished participants, happy afternoon. It is with a great pleasure and enthusiasm that we amplify to you the warmest welcome to our guest speaker, CMA Dr. V. Murali, Council Member, Chairman, Direct Taxation Committee, Chairman, Corporate Law Committee, CMA Malik Arjun, and Director, Grant Thornton Bharat LLP. I extend my heartening towards our correspondent, Mr. Venkatesh Raja Sir, her Director, Dr. Sai Satyavati Ma'am, our Principal, Dr. Malati Selvakumar Ma'am, CMA Ravi Shankar Sir, Head Department, Commerce, Dr. P. Suresh Sir. And I welcome you all Strategic Development Program on Digital Transformation in Business World. A well-warm thorn for driving and scaling a digital initiative. Day 3, Digital Initiative in Indirect Taxation. Today we embark on a journey filled with inspiration, knowledge, and the promise of meaningful connection. As we gathered here, I'm reminded a quote by Helen Keller, who once said, "Alone we can do so little, together we can do so much." This sentiment truly encapsulates the spirit of this gathering, where individuals from diverse background and experience have come together to share, learn, and grow. It's just an event, it is a testament to our shared commitment to excellence, collaboration, and the pursuit of knowledge. It is a platform where ideas are nurtured, talents are celebrated, friendship are forged. Throughout the session, we have lineup of engaging speakers, interactive sessions, and opportunities for networking that promise to inspire, educate, and empower us all. We encourage you to actively participate, ask questions, and make the most of this collective experience. Once again, I welcome you all. Thank you.
Thank you, ma'am. Thank you for your immense welcome and making the start of this event so pleasant. Now I request CMA TCA Srinivasa Prasad, Council Member of the Institute of Cost Accountant of India and Chairman of Information Technology Committee to deliver the keynote address.
Yeah, good afternoon. I will not call it as a keynote address because my colleague Mr. V. Murli, I think once he is free, he may be coming and then addressing because he is an expert on taxation. So I thank you very much for giving me this opportunity. I am traveling, so in case my connectivity goes off, please do pardon me. So this whole subject of IT related finance and taxation, we thought it will be very useful to all the participants, our members and students. The government is moving very fast with artificial intelligence and chatbot and other things. All of you must have seen when we go to the income tax sites, we have got chatbots helping us to do anything, and then IRCTC website also you have got somebody to help you. So in taxation also, government has taken workshops with different stakeholders like the industry, like institutes like us, institutions of universities and all. And then they had a workshop, 3 day workshop called Chintan Shiva about a month ago. And then they were requesting people to get their ideas on how a technology can help in the facilitating the taxpayers and ease of doing business on taxation and all. Our institute being one of the very premier institutions on finance and costing and the management profession. So I was fortunate to be part of that discussions, and then we had given some of the inputs and even the what happens to a B2C invoice, like a business to customers. We are all in customers. We may not have a GST registration number, but then how do we find out whether whatever tax that we are paying, whether it is being really taken and then paid to the government and all. All of you must be now knowing, otherwise this is an opportunity for us to learn. From September 1st, the government has brought out an app called Mera Bill, Mera Adhikar. I think many of you must have known about this. Otherwise, I request Rakesh when he speaks to give you more information on that. Mera Bill, Mera Adhikar is one where you will be able to upload your own bills as a B2C customer, and then later on, I think they may be able to take our invoices also and to find out whether the tax is being paid. On the direct taxation, all of you must be experiencing the very pleasant way of filing the tax, and then from 26 AS, you are able to get all the information. And if you are only a salaried employee and you don't have any other income, then filing of income tax return is almost a child's play. So these are all the things which the governments and many other organizations are concentrating on technology, and more AI, ML things are going to help the common people like all of us and the governments and the many of the departments and institutions and universities. So I had come and then I thought I'll just share some of the insight into this. Thank you very much. Thanks to the institution, this college, for partnering with us in knowledge sharing, and then giving us an opportunity to meet people across spectrum, different spectrum of students, faculty, members, and other stakeholders. Thank you very much, and my special thanks to CMA Rakesh Ravishankar for organizing these kind of workshops. And thank you, Rakesh. And thanks to Madam and thanks to the correspondents of this college. Thanks a lot. Jai Hind.
Thank you so much, sir, for your Chintan Shibir initiatives, which were taken by the GST network. So, sir wanted me to brief you on the Mera Bill, Mera Adhikar. The Mera Bill, Mera Adhikar scheme has been implemented by the Government of India in around 7 states and in the Territory of Puducherry. So, if you visit the gst.gov.in, you can find an advisory on the Mera Bill, Mera Adhikar. So, whenever you make a GST purchase as a consumer, you can upload the invoice. So, like what we get in the digital payment, like Google Pay, we get some rewards. So, the Mera Bill, Mera Adhikar through that app, the government is also planning to award the consumers, for being contributing to the nation building. So, this Mera Bill, Mera Adhikar aims at bringing in more transparency to bring a check on the invoicing system under the GST. So, as a responsible citizen, so whenever it is being implemented, so we shall log into the app in a phased manner and upload all the invoices and be a part of this nation building exercise. So today we have an expert speaker from Grant Thornton, Mr. CMA Mallikarjun, so who will be taking us on the initiatives in the indirect taxation area. Thank you, TCA Srinivasa Prasad sir, for all your support. Without your chairmanship, these type of 5 days capacity building program, it's a second program which we are doing it in the current month. So wouldn't be possible. And our views have almost reached 4,000 views for the past 2 days. So hoping to reach a very higher scale. Thank you so much, sir.
Yeah.
Over to Aarti ma'am.
Thank you. Rakesh, just 1 second. This Mera
Yes,
Bill,
sir.
Mera Adhikar has got a system when people upload on a monthly basis, some of their names will be selected and there is a reward scheme even up to some
Yes.
lakhs of rupees. So I request all of us to get in that app once the app is implemented in the respective states. Okay. Thank you. Over to the
Sure, sir.
organizers.
Thank you. Thank you. Thank you so much, sir. Over to Aarti ma'am.
Thank you, sir. Thank you, CME Srinivasa Prasad, sir, for your time, dedication, and effort for delivering the address. It was an absolute pleasure to hear your thoughts and learn from your experiences. I now introduce CMA Mallikarjun N, Director of Grant Thornton Bharat LLB. CMA Mallikarjun is a director with the Indirect Tax and Regulatory Practice. He is a cost accountant by profession and an MBA Finance. He has more than 13 years of work experience in the field of indirect taxation. Prior to this organization, he was associated with one of the big four consulting firms. He has been an active speaker in EPCES, CII, IJCCI, FIEO, MCCI, and has published articles in these forums, including Taxman and other technical publications. He has been associated extensively in the areas of Central Excise Customs Free Trade Agreement, foreign trade policy or procedures, service tax value, service tax, value added tax, central sales tax related matters. He has been representing clients before various government and regulatory bodies. His areas of expertise includes claiming incentives under foreign trade policy, customs, cess, and other central or state incentives. He has devised SOP and strategies to claim the incentives or refund and drawbacks for various clients in different sectors. He has an extensive experience in handling auto and OEMs, engineering products, electronics, and renewables. He has hands on experience handling various GST advisory in relation to impact analysis, implementation, business restructuring, etc. He has also advised clients across sectors in GST compliances and obtaining different types of refunds under GST. We are honored to have you today, sir. I request the sir to take over the technical session.
Thank you,
Thank you,
Mallikarjun ji, for
Shalini.
accepting our invitation. Thank you very much.
Thank you so much for the brief introduction. I would also request Mr. Rakesh sir to support me in putting up this slide because I couldn't able to share it in my screen. I have shared it in email. If you can present that file, it will be useful, sir. Can you do that for me? Yeah, that's great. So nice of you. Right. Thank you so much for the brief introduction, Ms. Malati, and also the thanks. I would like to extend the thanks to CMA and SA College of Arts and Science for giving this opportunity to e-connect with members of CMA, students, faculties of SA Arts and Science College, and also students across India and the faculties across India to this webinar. And it is it's kind of a wide reach for this topic to the wider audience in throughout India is well appreciated. I would like to take this to my professional career. And a very good afternoon to these people who have joined live session today for this particular topic. In this particular session, we are going to speak about the digital initiatives in indirect taxation. Uh, and also, I will throw some light on direct taxation, where we are in terms of the initiatives that has been taken by the government in the recent days. When we think about digital initiatives, immediately which comes to our mind, which is inevitable, that is the goods and service tax, which was implemented. Uh, uh, can I ask Sir to switch to the slides to the content? Can we move the slides?
Yes, sir. You can just move the slides. Yeah.
Yeah. Oh, okay, I can move the slide. Thank you.
Yes, sir.
Thank you so much, sir.
Automatically you can move, sir.
Sure. I got the point now. Yeah. So today we are going to cover some of the aspects of indirect taxation. How the India reacting to the indirect taxation? What was the digital initiatives happened in the recent times, and what is the GST statistics that has brought while the government has taken various initiatives? How this has been reflected in the revenue collections? And very important topic about input tax credit mechanism, how this is digitally works out in the throughout the business chain, and what are all the benefits that is extended to MSME. There are separate platform where enabled digitally through connect to the MSME platform, and also various other initiatives under digitization. And there are some of the central initiatives that has also been tagged to the digital platform for PLI initiative, PLI incentives, and the measures taken by the GST department to reconcile and issue the notices to the assessees if there is any mismatches in the tax liabilities or the tax credits. We'll discuss all this in the today's topic, and also what are all the digital initiatives under FEMA, under FTP, customs, and SEZ. And also, as I mentioned, I will also throw some light on the income tax. So some of the glossaries that has been used throughout these presentations were all put up here. Take a minute, just go through these acronyms where we will be using much familiar in the upcoming slides. Though it looks exhaustive, but some of them are familiar, like for example, input tax credit, ITS, foreign trade policy, DGFT, regional authorities, SEZ, DTA. DTA means domestic tariff area. LUT means letter of undertaking. Though I will bring those acronyms whenever I use it in the next upcoming slides. And coming to our first topic about introduction of the digital initiative, that as I mentioned, when there is a modern taxation, which is inevitable, that was implemented was the GST, which was the biggest reform since the independence in India. This GST has been widely introduced based on the OECD guidelines and principles. What is OECD? OECD is nothing but an organization for economic cooperation and development. This is so many countries are part of the OECD, and India is also part of the development center, which is a separate for any future reforms under taxation. Apart from the other 27 member countries, India is also formed member of the Development Center, not as the OECD general member. It is only for the member of the Development Center. Why this is required? Why OECD we are talking now? Basically because OECD gives the core structure, core principles to form any tax reforms in any of the country. So how India has adopted some of the OECD principles are, there are two fundamental principles. One is it should be a consumption based tax rather than the destination based tax. Earlier, we were into the S12 regime where we were
Mallikarjunji, we are not able to hear you.
So there is a technical snag. I think sir will come back in a minute or so.
Mr. Rakesh, hello.
Sir, there is a technical snag, sir.
No,
Yeah,
no.
sir is back.
Sir is back?
Sir
Okay,
is back.
okay.
Can you hear me?
Yes, sir.
Hello.
Yes, sir. Yes, sir. You're audible, sir. You're audible. You're audible.
Hello.
Sir, you're audible,
Can
sir.
you hear me, sir?
Yes, sir. Yes, sir. You're audible. You're audible. Sir, you're audible, sir. We are able to hear you.
Yeah, right. Thank you. Thank you for the confirmation. Right. So we were on OCD. Yeah, there is some echo. I think some fundamental principles where the two basic principles were already been part of the GST implementation. And five other guidelines were also recommended. One is the tax neutrality. There should be a, neutral treatment across the businesses. Earlier, before GST, there were treatment for customs, first stage, second stage dealers, service tax providers, service providers were treated separately, manufacturers were treated separately, and then VAT dealers were treated separately. All of them were merged under the one net called GST, which has been both central and state levied the taxes on one particular transaction. That is the biggest reform after the so many years. And also OECD gives an guidelines for having an efficiency in terms of administrating the entire mechanism. And also it should be the tax law should be simple and certain. And that's why the as soon as the GST was implemented, the government has immediately formed the council to address the taxpayers or the businesses issues concerns on over a period of time. So far, the GST has clarified around 1,000 plus areas of issues And also frequently there have been amendments and notifications were issued to make the reform more clear and simple. Though at the time of implementation of GST, it was called by PM stating that it is a good and simple tax instead of goods and service tax. Though the objective should be a good and simple, but it was ensured over a period of time. Now, after 6 years plus, we see that a lot of reforms have been made, and it is now we can see a real fruitness of the implementing the GST. We look at when we look at the statistics of how it has impacted the economy at the largest side, and it should be also be effective and fairness. And as I
Sir,
mentioned,
excuse me, sir. Sir,
yeah,
your slides are not moving, sir.
no, I'm into the first slide only.
Yeah, thank you.
Right, right. So I'll take some more minute to set the context so that we can when we connect some of the points that we discussed now, we'll be able to connect in the subsequent slides. So it should be flexibility, and it should be more effective in terms of the online filing mechanism. So all of these as we'll be discussing on each of the topic in the subsequent slides when we cover up each of the topic. Yeah. So how India is taking forward in terms of the tax reforms. If you compare with the other countries that we listed here, if you look at the timeline chart, in 2017, Italy has introduced the B2B e-invoicing. Brazil has updated the layouts for EFD contributions, and Mexico has updated the layout for the invoice data. Spain has implemented the new regime for invoice level details. For India, we will discuss in detail how this has been taken step by step for each of these transactions level. Why? Because India has got a wide range of consumers, and also the business portfolio is different compared to the other regions. And if you look at 2018, there were three other countries were brought followed by India. There are three other countries were introduced similar pattern of reporting style, and in Malaysia they are also brought in the e-audits, and also India has brought the robust reconciliation mechanism. How this will at the back end, how department is taking so many reforms to give curb the tax leakages and tax avoidances. All of these are followed by with the various other countries reforms. India is also following suit with the our own set of reforms customized to our own set of businesses and customers and consumptions in place. And if you look at way back, China has introduced the tax reforms in 1994. They introduced the golden system called e-invoicing way back in the 90s, where the B2B or the B2C transactions has to generate the invoice from the China website, their government website. Now we are now using a different platform to generate e-invoicing and e-way bills, but it has been introduced way back in 90s in China. That's why they are into the leading economy. But however, India is further more reaching to that level where most of the countries are looking at China plus one model, where they wanted to also look at India as the key region to invest for no better profits. And this is the overall structure of how this other countries are reacting to the tax reforms, and how India is also reacting to the tax reforms digitally to take it to the next level. Yeah, as I mentioned, for these key initiatives that has been brought, especially GST, what is the result that we have seen? By after the introduction of GST, there were the collection. If you look at the graph in the below table, the collections of the tax has substantially increased to 12 lakh crore from around 5 lakh crore. And it is if you look at the implementation date, that is 1st of July 2017, GST collections were for the half yearly itself, the collections were huge. and it was gradually increased, and now we are into the mark of 12 lakh crore, which is substantial. And this is going to be useful for government to take up other initiatives. And if you look at the registrations, 1.41 crore registered taxpayers are under GST net, which is huge compared to any other country. And if you look at the number of returns so far filed online, all of these are online data. 118 crore returns were filed so far, and around 397. By talking, it would have been crossed 400 crores of e-way bill generated through online mechanism, and there were about 1,580 e-invoicings were generated through using the online portal, and there are 39 crore e-invoicing generated, and 1,580 crore e-invoicing invoices were been uploaded. We look at what is upload mechanism, what is e-invoicing in the upcoming slides. And if you look at the graph of e-way bill generation, it is gradually increased. I will touch upon what is e-way bill and what is e-invoicing little deeper. See, the e-invoicing is nothing but for any transaction for a B2B, you need to go to a portal where you can generate the e-invoicing for issuance of B2B. We will cover that in the subsequent slides. And what are all the other reforms that government has taken apart from the e-invoicing EVS bill? There are faceless assessments. There were, and also there has been a wide increase in the KYC requirements, and there is a new introduction of income tax portal in the recent past, and there has been a new avatar in 26AS where it has been compared to the artificial intelligence system, and TIS transaction information system, where the incomes were reconciled and thrown in the system, where the individual taxpayer can look at what is the transactions that he has dealt with throughout the year. Those are all been auto-populated in the system itself. And there has been a robust system inbuilt for the input tax reconciliation. And also all of these taxpayers, all of these registrations were all under the one platform. We look at what is their platform and how these returns are flowing into this. And there are reforms under SEZ, customs, and FTP. We look at all of that in the upcoming slides. Why all of these reforms are made? Basically because to make tax easy, effective, efficient, transparent, and accuracy, and also give more clarity to the revenue department to reconcile and issue the correct notices to the correct default taxpayers. So if you look at the ITC, input credit mechanism, I'll just briefly explain what is input tax credit mechanism, how it was evolved over a period of time in the system. So at the time of implementing the GST, input tax credit was a concept which was introduced, where earlier before GST there were restrictions in availing the credit. The service providers cannot take VAT credit, or the excise cannot take some of the credits. So likewise, there were a lot of restrictions where the credit chain was not flowing freely to the final consumer. After implementation of GST, the credit chain were freely floating to the final consumer. How it has been done? It is all through the electronic mechanism. At the time of once the vendor issues the invoice to the recipient, he will generate the invoice, and he will mention the tax amount in the invoice, and that has to be uploaded in the system called GSTR1 on every month 11th, and that will auto-populate in 2A of the recipient portal. So there is a party A, there is a party B. Party A issues invoice to party B through online, where you will have to file GSTR1 and report it in the online compliance model, where this will automatically float into the GSTR2A of the recipient. All of these are integrated in the portal called GSTN. All of these registered taxpayers are given unique login where you can upload, receive information, and also you can generate, file return, and pay taxes. That is called GSTN portal. And apart from this portal, there is two other portal called e-way bill portal and e-invoicing portal. we look at that where we were and where we are today. So once the taxpayer party A issues the invoice to the tax party B, he will file the invoice details in GST1 that will flow into the party B return. That has to flow into the return so that he can avail that input tax credit and use it for his further supply or on the value add portion. So everything is connected to the system, and he cannot take any bogus invoices where everything is been now e-invoicing and been tracked down with the system based. So apart from this GSTR1 and GSTR3B return, what are all the other returns the GST requires to file online are? So any taxpayer registered under GST, they will have to file GSTR1 on a monthly basis, and they will have to also file GSTR3B on a monthly basis, where they will net off the input tax credit and pay the liability on subsequent on 20th of every month. There is one more return given for quarterly reporting and monthly payment for small taxpayers, where they can report the outward supplies on a quarterly basis and pay the taxes on a monthly basis. Apart from that, every other taxpayer, all the taxpayer has to file GST 3B and pay the tax liability on a monthly basis. Apart from these three returns, there is another return called GSTR 6 and 7, where there is a particular return for input service distributor, and TDS TCS reconciliations were also made through GSTR 7. And there is another two returns called GSTR 9 and 9C, where the annual return of entire transaction has to be filed in after the end of the financial year by September, or the extended due date by the government. The 9C is a self-certified report that has to be filed online. If a taxpayer is closing their business and exiting the scheme, exiting the GST registration, they will have to file GSTR 10 and close the returns. And if there is any merger or anything that happened during the business course, where the ITC balances lying in the electronic portal can also be transferred to the recipient business through ITC 02. And if the companies are sending the materials for job work, they can also file return called ITC 04, where the inward and outward movements are also tracked down digitally through the return. Why these returns are all important? Basically because these are all the basis for the statistics that we have seen in the previous slide. Why? Because it will avoid the duplication of credit. Earlier, there is no control, where the government not able to correlate between the center and the state. There were a lot of disputes between the center and the state reconciliation, especially in works contract scenario. And now everything is floated through system. And without the reporting, the recipient cannot take any credit. So which means there is a cutthroat on the input tax credit, where it has to be a proper B2B or a proper reporting invoice to reflect in portal, so that you can take it for payment of your tax liability. If there is any mismatch in the tax credit or the tax liability, immediately the system is itself automatically throw the notice to the taxpayer, where he has to respond within certain time limit. If he doesn't respond within the time limit, then the return filing of GSTR 1 and 3B will be holded for some time till he respond to the notice and clarify why such differences are. So the entire mechanism, entire platform has been built in such a way that there is no escape in terms of the reporting as well as payment of taxes. As I mentioned earlier, GST registrations were made, though it is made online, the officer used to visit to the taxpayers and scrutinize the premises, and then they will process the application. Now it has been made very clear that entire process should be online, and it has to be through the eKYC. The entire process of registration should get completed. Only few sectors, few type of businesses are given for a physical verification. Apart from that, everything they wanted to do it through online. And as I mentioned, the returns were also made online. The filings were made much simpler. Earlier, it was through the DSC, and even for nil return filing, now you can do it through SMS filing itself. And QRMP filing is also made very simple and auto-populated field-based return, where if you log into the portal, it will automatically throw your input tax credit. It will automatically throw your output tax liability. Basis your vendor filing and basis your outward report that you are filing, the automatically it will calculate and throw the amount that you need to pay. Apart from that, you will also self-reconcile whether you have any other transaction like RCM or any other transaction which will attract other taxes, where apart from the regular reportings that has been auto-populated, you will have to calculate that as well and then report in the monthly return. And coming to e-way bill, this is a wider reform where the earlier each and every goods will go through the verification of at the entry gate of each state. Okay, it takes a lot of time in getting the clearance from the border. After introduction of the e-way bill, the businesses have achieved larger cost savings in terms of the transportation. The portal has made robust in terms of generating the e-way bill. E-way bill is nothing but for physical movement of goods from one destination to other destination, where the taxpayer for initiating the transaction and also trigger the movement of goods, he has to generate the e-way bill and also put all these details of the transaction, like what is the type of goods, where it is going, from where it is built, what is the value of the goods involved, and also you will, in the part B of the e-way bill, you will also disclose the transporter details and which on what transport it has been transported to the recipient location, what is the destination, how long it will travel. All of these are recorded in the e-way bill. Now, the e-way bill can also be generated through using a mobile number through SMS through the portal, and also there is an Android app which has been introduced, and also you can upload bulk generate e-way bill. Earlier, each and every transaction has to be generated through portal to one site, but the government also given ASP GSP solution providers, where the bulk uploads were also made easier at the time of implementation of GST. But the department itself, the government itself came up with a model upgradation where the bulk upload is also made easier now. And also the as I mentioned, there is an site-to-site integration which is allowed for the ASP GSP providers, where the government portal is directly linked to your ERP. Once you generate the invoice, it will automatically trigger the e-way bill details, and it will interact with the e-way bill portal, and it will generate the e-way bill. And you can have to put the transporter details and generate everything made online and easier. Like earlier, this sort of system were not there. Like to interact with the government portal, there was the ERPs were not allowed. Through ASP GSP solution provider, you can interact the government portal for generating e-way bill or e-invoicing both. And also this ASP GSP providers are helping the taxpayers to file the returns also. This will provide additional advantage for the taxpayers to look at the input tax credit or the tax liability on a real-time basis, which will give an additional advantage compared to the other taxpayers. And another important factor is e-invoicing. E-invoicing first introduced in 2020 October, where it was made mandated for 500 crore businesses. And in the recent 1st of August 2023, even 5 crore businesses has to generate e-invoicing. What is e-invoicing? It has to be for the businesses who is crossing the turnover limit. They will have to report their transaction and in the online mechanism and generate the e-invoice with the what is the type of goods that they are selling, to whom they are selling, what is the HSN code, what is the value of goods, and all of these details were being captured in the backend system, and it will throw the QR code which will be pasted in the invoice, which will be helpful for the department to scrutinize during the transit. This is the bigger reform which will help the reconciliation of the transaction for the input tax credit as well as for the reconciliation if there is any bogus invoices or avoidance of duplications for the larger reconciliation of the taxpayers. This is a unique system which is driven by a separate portal where the login credentials were given to the taxpayers who crosses the limit. They will have to just go to the invoice registration portal where they can put up these details in the, they can feed manually or they can upload in a JSON file, or they can also integrate their ERP through ASP GSP provider where they can do bulk upload of the e-invoicing data and generate the invoice. What is generation of e-invoice? Nothing but a QR code will be thrown by the government system, which will be affixed in the invoice, followed with a 46-digit code, which will also be generated along with the barcode, along with the QR code. So all of these are the reforms helping the GST to collect more tax. So I mentioned about there is a separate reform given by the for the MSME sector. The threshold has been minimized to 10 lakh for certain regions of states, and a QRMP scheme is introduced for players who are having an aggregate turnover of 5 crores, where they can report the transaction on a quarterly basis and then pay taxes on a monthly basis. And composite scheme was also introduced for players who are more than 1.5 crore, where they can simply pay 1% of the total transaction turnover without taking any input tax credit, without having much compliance burden. They can just simply report the transaction in the turnover level and then pay the taxes. And it is also given for leeway for 75 lakhs for certain states. And some of the services is also covered under the composite scheme. At the time of introduction of GST, this was not there. And then later they brought this, and few exceptions were also brought in, but these are all the taxpayers were not allowed to do for go under composite reporting. And the tax invoices are also evolved over a period of time. Initially, at the time of introduction of GST, the tax invoices were issued with the simple 2-digit level chapter code heading. Later, it has been brought to 4-digit, and now that it is at a 6-digit level. And it is made mandatory for all the invoicing which carries the HSN code at least at the 4-digit level. So far we have seen the digital initiatives under GST. We have seen at the time of implementation what it was in terms of the registrations, in terms of the input tax credit, and in terms of the e-invoicing, e-way bill, and reportings, and also different types of taxpayers, how they are reporting in their online portal, and how this is helping the department for reconciling at the back end. Now, there is another reform that has been brought by the central government called Production Linked Incentive Scheme. This is a scheme which is given to the tax businesses for a specific sector. If you look at the right side, there are a few sectors which has been given with a special incentive if they achieve particular investment and also particular incremental sale. This incentive is for a period of 5 to 6 years on a incremental sale turnover, whatever the company does. There will be a range of percentage from 5 to 10%. So why this is important? Because this is invited across India. All of these applications were being traced through online. It has been made single window where the applicant has to file with the detail of their business and along with their reports through online, and the registration process is also through online. They made scrutinies and then interact with the businesses through virtual, and then introduce the they announce the taxpayer, they announce the production link incentives for the businesses who have got selected in the process. Everything is made online, and also once the PLI scheme is approved for a particular business, they'll have to report their performance on a yearly basis through the online mechanism. That is also made online. All of these are made online to give for the incentive disposal also, not only for the revenue collection. department is working for the giving the incentive also. This is made online. People will need not businesses need not go pillar to post to collect incentives like in earlier. To collect a state incentive, they were made to go pillar to post to collect the incentive. Even some of the industries are facing difficulty to get the incentive till now. Now making it online to give a robust reporting mechanism gives the transparency and also easy disposal of the incentives. So we have looked at the tax reforms for the businesses, how the department is working at the back end, how the government is working at the back end to reconcile and also catch hold the fraudulent transactions or any short or the excess refunds or the short payment of taxes or not payment of taxes or fraudulent activities. These are all the digital initiatives at the back end the department is working on already. The three of them are in live and they are all working fine. If you look at the automatic return scrutiny, it's happening at the back end. If you look at the if there is any mismatch in to be credit, it will automatically throw the notice to the taxpayer. And also, if you reported some invoices in GSTR 1 and not paid taxes in GSTR 3B, it will automatically throw the notices to the taxpayer stating that there is a reconciliation error. And if there is a vendor who has issued the invoice which is not active after a later point and he has not paid the taxes also, those things are also triggered to the recipient taxpayer where he was asked to prove the validity of the credit. All of them were being made automated in the backend, and all of them were looked at extensively at the transaction level. And this is another interesting initiative where the government has taken advanced analytics in indirect taxation. This is to check the reactions of the business, how they are using the technology, and how this will help the department to tweak some more angle of reconciliation to give a robust report to the tax authorities at the ground level. Next, Digital Directorate General of Analytics and Risk Management (DGRAM) sits in Delhi, where they have a robust system at the back end. All these taxpayers, when we looked at the 1+ crores of registered taxpayers are there in GST. All of these returns, like in 100+ crores of returns, are floated in the system. All of these were reconciled at the back end, and if there is any mismatches, any thing that triggers the not payment of taxes or fraudulent activities, which will immediately trigger the issue to the jurisdictional tax officer. Each state has got robust tax officers. For example, if business registered in Chennai or business registered in Andhra, business registered in Telangana will have will be tagged to the jurisdictional commissioner, will be tagged to the jurisdictional assistant commissioner, where down to the inspector or the assessing officer. Till that stage it has been connected well, and if there is any trigger and tax leakage, immediately this DGRAM will trigger a notice to the jurisdictional tax authorities, and it will in turn report to the superintendent or the inspector, which will go to the taxpayer premises and do the auditing for the particular transactions. So it is all robust now. No transaction will escape from reporting. And also Director General of Intelligence at the back end, which will cover much wider than the previous one, which will also cover the international transactions and also the customs transactions, where if at all any fraudulent activity or any mismatch in the reporting, which will immediately trigger the notices. And they will there is a separate department which will come for the from the investigation, which will they'll sit for days together with the businesses, where they will verify the all the data, not only the GST returns or the general reporting. They will look at the bank statement, they will look at the financial reporting, they will look at what is the cash that you are handling, they look at the stocks, and everything will be scrutinized if there is a particular trigger that have happened picked up at the back end. And as I mentioned, there is an automatic generation of notices, and it automatically corrupt the e-invoicing e-way bill. If e-invoicing and e-way bill is holded by the department, then the businesses cannot run their day-to-day transaction. They cannot move the goods, which will be upheld, which will be holded by the tax authorities at the exit gate of the state, if it is not with the valid e-invoicing or e-way bill. So, without responding to the notice online, you cannot move forward. That is made very clear now in the recent budget also, recent council meeting also. So we have seen the digital initiatives under PLI, GST. Now there is another tax reform under indirect tax called foreign trade policy. This policy deals with the import and export transaction in the international trade and also services, and it will give the businesses to have a transparent transaction with the cross border. What are all the initiatives that has been taken by the FTP? Or any businesses without an IEC, import exporter code, they cannot do any transaction with the other countries for even for the goods or services. They need this IEC code made online. If there is any change in the business credential, you can do it online. If there is any branches that you wanted to add, you can add through online. So everything is faceless, and without IEC code, the transaction cannot happen. And the other one is the certificate of origin is also made online, where this is an interesting one which allows the importer and exporter to have a constitutional benefit. This is also made online, where the certificate of origin can be applied and obtained from the nodal agency, which is prescribed by the foreign trade policy. And also there are licenses under foreign trade policy, which is under which gives the taxpayers to have which gives the taxpayers to procure the raw material or the inputs without duty, and also procure the capital goods under EPCG license without any customs duty for manufacture of export goods. These licenses, reporting, and fulfillment of obligation, and for getting the final closure, everything is made online. No physical filing. You need not file the shipping bills. You need not file the bill of entries copies. All of them are made online, where the entire chain go paperless. And DGFT portal also robust enough to cover the transaction online. And if you go to the DGFT portal particularly, where where the lot of information are made available. The the training modules, the video files were all given in online, where the businesses can go and check the portal to get themselves educated for all these initiatives. And now coming to the customs. See, customs is one of the important topic where any businesses, any enterprises, they dealing with the import and export, they'll have to fall through the Customs Act or the Customs Tariff Act, where there were lot of documentation at the initial stage of customs, which was made easy in the recent past. A lot of documents were cropped into single documents, like bill of entry for import and shipping bill for export. Apart from that, few other documents were made mandatory, like bill of lading or the mate's receipt, or one or two other documents were made mandatory for import and export transactions. No, nothing else is required. Earlier, there were so many document requirements were there, were also all of them were physical documents. There now, before reaching the goods for clearances for import, the importer can approach the customs 2 days before and file the bill of entry. Once the goods reaches to the customs, without any waiting time, you can clear the goods after the due sample checks and others. So customs has taken a lot of initiatives in go paperless, and also taken various initiatives on ease of doing businesses, where they made duty payments online. They made each handshake for handling the documentation. As I mentioned, all of this reporting can be done through online, where the goods the officer in charge will verify the goods online, verify the documents online, and also verify the goods, and then make the clearances for the taxpayer to clear the goods in a short span of time. And e-transit blockchain-based electronic cargo tracking system has been introduced to track the bonded goods to no movement of bonded goods to one cargo to another cargo facility. And QR code based sampling solutions were also made enabled to have a faster sample check. And electronic cash ledger also made easier for the importers to pay the taxes upfront and clear the goods without going through the challan processes. And there has been a single window interface facility trade, which is the recent one shift, which has made easier for the businesses to file the documents and get the approvals through the offices without interacting in person. All of them made faceless through the digital platform. And if you look at the other side of it, apart from these regular transactions like reporting or the documentation, any incentives or the drawback or the refunds in customs are also made online, where earlier they used to give the check for each of the refund payments. Now, after the introduction, they all of these payments were made mandated to hit the bank account directly. If there is a sanction of drawback, if there is a sanction of customs refund, it will go to the bank account directly instead of going through the challan or the check processes. And now we looked at the initiatives under customs. These are all the initiatives under SEZ. The SEZ as this is a separate topic where the businesses who are into export and import who wanted to set up their businesses in a designated place to enjoy the benefit of claiming the exemption on all of their imports or the services, even for the both domestic as well as for the DTA. They can enjoy the benefit of tax-free supply chain, but it should be in a separate zone. To operate under this zone, you need to approach the respective zonal office to get yourself registered for your business. There are certain compliances for getting registered yourself under the SEZ scheme. Once you get registered under the SEZ scheme, there are a lot of reporting gets triggered. The reportings initially were made physical. You need to go for procurement document from DTA. You need to go and approach the customs in charge to get the process verified physically, and then you will give the approval. Now everything is made online. Before it reaches the SEZ zone, if you file the bill of export, the officer in charge will do a sample verification and he will approve. Once the approval made available online, that will be the bona fide document for claiming any incentive by the DTA payer. Why? Because if you are dealing with an SEZ, you are treated as if you are doing an export. For all of the exports from India are incentivized, or the refund mechanism is given for them to get the tax back from the whatever the taxes that has been incurred in the supply chain. So these are all made online for the reporting as well as approval mechanism, for which the entire transaction made simpler while compared to the at the time of introduction of SEZ scheme. And also the softex filings are also made online, and you can do a bulk upload of softex, which can be approved by the SEZ or the STPI authorities. There is a separate scheme called STPI for the service provider who are into exclusive for the software exports. They can get themselves registered under the STPI scheme, where they can report their imports or the inward transactions, and then report the export services in their in an online portal. Similar to SEZ, the STPI authority will also verify the backend and approve the softex forms. These are all required basically because to have a track on the inward and outward of the forex reserves which come into India from the RBI guidelines. These are all being implemented. So, as I mentioned, there has been initiatives under income tax as well. The If you look at the filing of income tax return in the recent past, there has been a change in the portal where the data have been pulled up automatically based on the TDS returns filed by the taxpayers or the firm employer, which will be pre-filled information which will be made available online. Apart from that, there has been a robust artificial intelligence. If you look at the separate tab where you can look at the other transaction where you dealt with it during the year, how much you dealt with the shares and capital gains or the bank transactions or the credit cards and other information were all floated through the banking system through the ITR portal, where you can also check whether you are missing any income or the expenditure, take an advantage of deduction or not reporting for the tax payments are all made available online to do a double check before you report to the income tax authorities, which are all made possible basically because of the digitizing the reporting, digitizing the payment, digitizing the entire business transactions. And also everything is processed through online. You need not have a physical interaction with the officers. All of them are faceless. Even if you receive a notice in income tax portal, you need to respond through online mechanism where you are made given with a separate portal where you can also, if you have any grievances, also you can address it to the grievance portal. Everything is made online. You need not step out to the income tax department for any reporting purposes. As I mentioned, it is all single window clearances. So we discussed various reforms under GST, customs, and SEZs, income tax, STPI, others. What is there as a way forward that GST has to form? There are few other areas that where the GST is looking at is they wanted to until commission appeals it is all streamlined. The appellate tribunal has not been made available now. All of these issues under GSTs are approached either to the court or the Supreme Court. The Whatever the reconciliation issues or the litigation arises in the reporting, which will go through the commissioner process and it will directly go to the High Court since there is no mechanism for appellate tribunal right now. And in the recent past, the department, the GST Council has also introduced the mechanism to form the GST appellate tribunal, which will be sooner be implemented in across the states, important states where the metro cities are there. And for the better compliances, at the time of introduction of GST, they introduced the compliance rating mechanism where the taxpayers are given a compliance rating based on their reporting, tax payments, or the written filings. Based on the regularity of their compliances mechanism, the ratings will be allocated. But it is not made operational as of now. And in the recent announcement, they said that in upcoming year they wanted to implement this compliance rating model where the taxpayers or the registered GST players will be allocated with the rating, which will improvise the competition in the market. And also, this will be a credential for the businesses to say that they are reporting or compliant to the tax reforms. And proactive evolving the other areas of taxation, like for example metaverse or the cryptocurrencies or the digital assets were also been brought under the tax nets. Need furthermore clarity on how to tax and what to tax and what value to be taxed, including the online gamings where the recent disputes that has been arisen. So all of this has to be settled in the going forward. And and also GST doesn't cover the petrol, diesel, and aviation fuel, which is kept outside. Alcohol for human consumption also kept outside. If it is brought into the tax net, it will give a wider picture. And also there is some cascading as of now, which will also be addressed if these products are also brought into the tax net of GST. And as we mentioned, though the digital platform is made enabled for the taxpayers to report, it has to go much way to give more reconciled data to the businesses to have a clear approach to the tax leakages, and also the reportings has to be made robust, which will has to be made easier or the tax cost effective to the taxpayers. That is the idea about entire digital reforms that has been brought. So we have widely covered the digital reforms around the indirect taxes. For example, we have looked at the GST, we have looked at the customs, we have looked at the SEZ, STPIs, and the income tax, and also what are all the way forward under GST. And what is that as an individual we need to be aware when we are dealing with the certain things. We need to be equipped ourselves to the digital evolving world. We need to also understand, apart from the CMA graduates, apart from the regular graduation, we need to also understand the artificial intelligence tools that are made available in the day-to-day life, where the data evaluation, data modeling, data analysis, data sanitization, Power BIs are all available. So we need to be familiar with this, any one of this model to make ourselves familiar with the digital reportings, and also to have a robust reconciliation in the future days to come. With that, I would extend my thanks to Rakesh sir, especially for giving this opportunity. So we can now take up the questions if at all we have anything.
Audience are requested to post the questions in the chat box.
Sir, I have a question based on your presentation, sir. Like, you were telling about the way forward for the GST. Like in countries like Singapore, the entire invoicing system comes under the technology initiative. So if I buy a bill in the airport, immediately I'll be able to check it in the taxation portal. Maybe like, what is your perception? How long it will take for such a system to come in India?
Yeah, so if you look at the recent introduction of taking the some more tax net, like the businesses at the 5 crore, even they are brought under the tax net. So they wanted to first crop the larger picture than to go at the transaction level. Singapore is a country with the smaller population where the businesses are very limited. India wants to cover the larger population, larger businesses first, and then bring them under the tax net, increase the tax revenues, and then focus on giving the rebates and refunds for the individuals. Right now, indirect tax doesn't give any refunds or the tax advantage for the individual. That is what the Singapore and other countries are currently doing for refunding the taxes to the individuals. Slowly, the India has also brought the mechanism to refund the tax that has been incurred at the particular zones. Like, for example, in the airport, there has been made, but still it has to be made familiar with the people who are using it. And not we have not reached to the stage of robust where the stage of giving the bill and the boarding pass you get the refund. We have not got into that stage.
Yeah, thank you, sir. There is one more question, so which we have pinned it on the screen. So they are asking about tax implications on the supply chain management.
So, if you look at the supply chain typical model for any industry that you take, it starts from the procurement, inward issues to production, and then manufacture, and then supply to the final consumer. Throughout the process, ensure that you are dealing with the registered taxpayer first. You have the valid invoice in place for the procurement, whether he has reported in the portal within the due date, and it has been reported back to your system, whether you can see that particular transaction in your system for the purchases, and you account it for the production. That is the basic requirement for taking any credit into the books. And then you use it for the production, and then on this input tax credit, whatever the value add that you have done on the finished goods, you need to trace it down to the final stage, put a value for the finished goods, and you can very well adjust the valid credit that is throughout the supply chain to the finality of the finished goods that is supplied to the final supplier, final recipient. If you are into import and export, if you are into a different method of business combination, for example, if you are 50-60% of import and 30% of domestic, and 50% of export and 30% of 50% of domestic, you have other mechanism. For example, you can get into the scheme called SEZ, where you can set up the facility into the SEZ, where the entire supply chain will become tax free for the export supplies. If you are into a particular scheme called mover under customs, the entire supply chain will not affect the imports, will not affect the tax at the import stage. You can defer the taxes till the supply. So it depends on business to business. What is the combination of your import and the domestic sourcing, and also export or the domestic supply? Based on this combination, you can choose a supply chain model under indirect tax, which is the best model for you to suit with. You can also use the foreign trade policy to go navigate yourself to the customs mechanism. We have written one interesting feasibility paper which was published in IJCCI. If you wanted to know, just go through it. We just covered extensively research on the supply chain, how effectively you can manage through the indirect taxes. So-called digital initiatives, even in direct taxation, perhaps still seems to be many. IT return ensure themselves out of the tax net. Your thoughts, please. Yeah, so there are a lot of data that has been crunched at the back end. Sooner or later, the lot of taxes leakages will be corrupt, and then notices will be issued to the holder of PAN or the bank holders. Now, if you look at the government, how they are reacting, bank accounts are made mandatory to link with the PAN and other with the mobile number. So, if it is cash transactions, the way to go to curb to bring it under the tax net. If it is a cashless transactions, it will definitely sooner or later will come into the tax net, and it will definitely trigger the individuals to file the return based on the AI report. If a person who is not filing the income tax return, or if a person is not having a TDS or the AS 26 AS, still if you go and log in with his PAN number, go to the AI portal where you can see if he has made any online transaction throughout this year. So slowly government is bringing the tax net, increasing the tax bracket to the individuals who are out of the tax bracket now. Many of the shopkeepers prefer to deal with the cash transaction wherein avoid GSTs. Example, many furniture shops are saying. Yeah, still, it goes long way back to how to crop this transaction. The department is taking so many initiatives. Practically, I've seen one case where one of our known taxpayer were running a retail store where the was not issuing an invoice, where department has made a surprise visit and then identified that they are not issuing an invoice. That has happened in TN, and also TN has issued a policy to do a surprise purchase check. So the tax officers are made mandated to visit like shops like this to have a check on whether they are issuing a valid invoice. First of all, to check whether their digital transactions are within the tax net, and then they go there and then find out whether they are. See, a lot of other data are helping the tax authorities to go particular businesses to check whether they are issuing a purchase correct purchase sales invoice or not. For example, there are other purchases. For example, there are other digital transactions or other digital assets. All of them were linked to these shops, and then they will go surprise visit and then check whether they are doing a proper transaction or not. For example, if a shopkeeper making an credit card payment of more than 10 lakhs, but he is not reporting any GST sales, immediately it will trigger to the banking system, which will automatically cross share the information to the GST authority. They will look at the come and verify the tax businesses and see whether they are properly reporting or not. All of these data are cross checked, and will be sooner or later they will be cashled. Any other questions?
Sir, the questions are done, sir. So thank
Okay.
you so much for your time. You answered in a very splendid manner when you spoke about the extensive paper on the supply chain management. So it shows your voracious reading and the keen interest. So over to Aarti ma'am for summing up.
Thank you, sir. Your expertise and in depth knowledge on the subject were evident, and the session was incredibly informative and engaging. The session has provided us with a valuable foundation to further explore and implement these technological advancements in our work. Now, I request Ms. Vaishali, Assistant Professor, PG Department of Commerce General, to convey the vote of thanks.
As we conclude this remarkable event, I deeply honored to express our heartfelt gratitude. I am Mrs. Vaishali, Assistant Professor, PG Department of Commerce. Let me begin with quote from the great Winston Churchill: "We make a living by what we get, but we make a life by what we give." First and foremost, I want to thank each and every one of you for being here today, for your present participation, and for making this gathering a memorable one. Your presence has added enormous value to our event. I want to express my deepest appreciation to our esteemed speaker, CME TCA Srinivasan Prasad, Council Member and Chairman of Information and Technology Committee. Your wisdom, insights, and contributions have enriched our event and inspired all of us. We are truly honored to have you in this section, sir. I am grateful to thank CMA Mallika Arjun N, Director of Grant Thornton Bhagat LLB Council Member, for spending his valuable time with us. I would like credit to our correspondent, Mr. Venkateshan Raj, sir, our director, Dr. Sai Satyavati ma'am, our principal, Dr. Malidi Selvakumar ma'am, CMA Rakesh Shankar Ravi Shankar sir, head of PG Department of Commerce, Dr. P. Suresh sir, and faculties. Last but not least, my dear participants, for making this event resounding successful. In closing, I could like to live with a quote from Offit Windsor: "Be thankful for what you have. You will end up having more. If you concentrate on what you don't have, you will never ever have enough." Today, we are thankful for your presence, and we look forward to future opportunity to share, learn, and grow together. Thank you and have a nice day. Thank you.
Thank you all.
Thank you, sir. Thank you, everyone, for joining us today.
Stay tuned with us for the day 4. Tomorrow is a very interesting topic. It is on Chat GPT. So Chat GPT is one of the new areas. So stay tuned with us on the same YouTube channel at 2 p.m. on 28 September 2023. Thank you so much.
Thank you, sir.